Every year, tax season comes around, and every year, you're shocked by how much you owe. You do realize that's the definition of insanity, right? Doing the same thing over and over again and expecting a different result. Over 90% of small businesses overpay on their taxes simply because they don't have a tax planning strategy in place. What if I told you that smart tax planning isn't necessarily about just finding all the loopholes, but instead it's about strategic planning and having the right partners in place to help you with that planning? Stop the insanity cycle. Stop waiting until April to file or plan for your taxes. The best tax strategies start months, sometimes years in advance. And so it's not enough for you to just talk to your accountant once a year in April. If you've ever been blindsided by the amount that you owe, here's the good news. You can do something to change that. And there are very simple steps for you to discuss with your accountant. Hopefully they're also a tax strategist to help you minimize your tax burden. There are 5 steps to properly reducing your tax bill. Number 1, you want to choose the right business structure. There's sole proprietors, S corps, a lot of different options out there. The best thing for you to do is not make that decision yourself, but instead talk about it with your CPA to ensure that you are selecting the right business structure for you and your business. Number 2, maximize your deductible expenses. Now, I'm not saying go out there and buy every piece of equipment under the sun simply because you want to lower your tax burden. But if it makes sense for you to invest in that certain piece of equipment or software before the end of the year, because it's going to give you a return on that investment, then yeah, do that. Number 3, leverage retirement contributions. We work with a variety of different business owners here, white collar, blue collar, $250,000 a year, $10 million a year. And you know what we find interesting is that pretty much none of them have really great retirement plans before coming to us. Just because they've always been reinvesting their profits back into the business, or if they're getting out of a scaling phase and they've cut back on what they're taking home personally, they like to try to catch up on that personal take-home pay. A good way for you to plan for your future while also minimizing your current tax burden is to leverage proper retirement plans. Now again, talk with your tax strategist, make sure that you are looking at the best plans for you, and then have a conversation with your financial advisor as well. Number 4, utilize your tax credits. There's a lot of different tax credits out there. Your accountant's gonna know more about them, but R&D credit, your employee retention credits, energy efficient deductions. So all of these items are things that can lower your tax bill dollar for dollar. And then number 5, plan for your quarterly tax payments. If you are surprised by that massive tax bill at the end of the year, maybe you should be making payments throughout the year in addition to setting that money aside in savings in preparation for that tax bill. I would much rather you have $100,000 set aside in savings and you only owe $80,000. Make sure you are talking with your accountant at least 4 times a year so you can make more proactive decisions. In our next video, we're going to talk about how you can maximize what you charge so you're not leaving any money on the table. I hope to see you here next week.